Bitcoin saw a short-term correction as warned about in yesterday's video upon breaking down from the major range low at 29,800. The short-term correction has pushed the price down to 29,100. Is this the end of the correction? Is Bitcoin going to move down lower, or could we potentially climb back above 30,000? These are questions we'll be answering today, so stick around to the end. Okay guys, welcome back to the channel. Thank you for tuning into another video. I hope you're all having a great day today. We're here to discuss Bitcoin as the short-term price action has broken down from the major range low support at 29,800 to reach the midway point between the VRPV gap at 29,200, the first major possible reversal point. In today's video, we'll be analyzing the short-term data from a technical and structural perspective to talk about whether or not this rally, or should I say this crash toward the downside, has exhausted and we're going to see a rally back up and above 30,000. We'll also discuss the broader markets and market data as we go. Before we get into it, smash that like button, hit the comment button, and of course subscribe to the channel guys. If you are new, hit that bell icon. You won't miss another video. If you want more information, content and posts, you can find us on Telegram. The second link down below. You'll get access to charts, updates, analysis, videos, information, educational posts, and news events. So much in here guys. So much content. We keep you up to date with all of the important stuff between our videos every single day. If you're interested in supporting the channel, sign up to Bitget, 15% off your trading fees via the first link down below or the link in this channel. And of course, if you're interested in our VIP channel where we post exclusive updates, exclusive analysis, actually, we post trade signals in there too. You can find our entire track record of trade signals if you click the link. Every single month, we post 20 to 40 trade signals, exact entries, exact targets, focusing on scalp trading, focusing on swing trading as well. You'll also get access to our group chat with two separate group chats. There's our general chat and trading chat, an additional group chat for help and questions, and of course, additional videos where we'll be starting altcoin videos in there as well. Again, more information on that and how to join can be found in the pinned comments of the free channel. Let's go ahead and get dived right into today's video, starting off with, of course, the market data for Bitcoin. 3.66%. That is what we're up currently for the month. Liquidations are down 9.14% for the 24-hour period, and of course our volume is up 8.41%, sitting under $100 billion there. Volatility index took a nosedive, and if you've watched what I've been saying, if you've been listening to our channel, we said over the last few weeks we expected volatility to take a nosedive as we were plateauing for a very, very long time. And the reason why it took a nosedive is because it's measured on a 30-day period. The majority of our volatility came from this area here. And of course, this has now surpassed or lapsed that 30-day period, and therefore volatility in this new range is lower in comparison to this range, and therefore volatility has fallen. Now, volatility is a good indicator for overall trend strength, and we'll discuss that in just a bit. Looking at the 60-day period, the volatility has also come down, but not quite as aggressively as the 30-day. Again, it is accounting for that surge in volatility we had between 20,000 and 28,000. Liquidations, of course, have been quite aggressive in the last 24 hours. The majority of these liquidations coming from over-leveraged longs. Now, yesterday's video was a little bit of a rant, and I was telling you guys in yesterday's video, the macro trend, the higher time frame trend, is very much up, very much bullish. But I said, do not over position yourself within this range. If you were buying in this range, you were late. You were late to the run. You missed the best buying opportunities. You were purchasing high instead of purchasing on red candles or drops. You were essentially being turned into liquidity, and that you were. When the price crashed below 29,800, we saw a significant pullback on Bitcoin here, resulting in a whole bunch of long liquidations. Maybe you didn't get liquidated, maybe you're still in. Congratulations, we're holding some longs, we didn't get liquidated, but of course a lot of people aggressively entered above 30,000 with massive amounts of leverage, and we saw that on all the data. The data was reflecting people were entering Bitcoin in this range with huge amounts of leverage and very, very tight margins, meaning they had a very small room for error, not large enough to withstand even a smallish crash like this. Bitcoin did crash down, it did result in some liquidations, and of course, like I've been saying, Bitcoin doesn't just only go up. It's in an uptrend, but we are going to see these pullbacks in the trend naturally. It is perfectly healthy and perfectly natural to occur, and you can't blind yourself to even the smallest pullback because you can't capitalize on this move. Myself personally made over around 10,000 Australian dollars just scalp trading this move down. You can make a lot of money in both directions. Time frame is very much relevant. Let's talk about the DXY. The DXY has attempted here to break a downtrend. Remember, 3 points of validation. 1, double bottom formation, horizontal support. 2, we had a daily bullish engulfing candle. Perfect, great to see. 3, we need a break and close and hold above this downtrending trend line to confirm a breakout. As you can see on the 4-hourly chart here, guys, we're kind of flirting around the trend line. We haven't really had a strong close above. We had a breakup, close below. We had a candle on it. We had a close below. We had a close below. So we technically haven't really closed above this trend line yet. We're very much just on it. And again, until we close above that trend line, the DXY will not flip upwards, will not flip bullish, and we can potentially still go down. If the DXY does go down, traditional markets and Bitcoin cryptocurrency markets will rally, guys. They will rally. If the DXY does flip this and continue upwards, however, we are going to see pullbacks across the board, but until then, we do have to assume the uptrend is still in play. S&P 500 at major resistance here. Breaking through this resistance will result in a strong move upwards, potentially to retest the local highs at 4,300. We do have a nice chunk of support right below us between around 4,100 and 4,150 that could potentially hold us up through any turbulence. Dow Jones, similar thing over here, strong resistance directly above us. Breaking through that resistance will result in a continuation upwards. And as you would know already, guys, if we do continue upwards, cryptocurrency is more likely to continue upwards. In fact, cryptocurrency will lead the move upwards as it is a more volatile asset. Really quickly, guys, going back to this chart over here, we can see the differences in risk return. Oh, I must have deleted all of it. Okay, never mind. I deleted all of it. I have to come back to it. I have to find it on another video. I'll show you guys the next day. If you remember, it was the chart that looked like this. We had the beta and the risk on this side, and we had the perceived risk return based on correlation between assets. And Bitcoin, essentially cryptocurrency, has a higher beta and a higher risk return as it is a more volatile asset than stock. So I've said at the start, if you look at market bottoms, the assets are going to perform the best after market bottoms or rally the largest are the more volatile assets. So it's not that Bitcoin detached itself and decoupled itself from traditional markets. It's that it moved a greater percentage because it is a more volatile asset in comparison to traditional markets. In reality, they both went up. The direction is important. The correlated direction is important, not the percentage change between assets. All assets will fluctuate different percentages. It's the direction of the price action that determines the overall correlation. And that is what's key. That is what's key, essentially. So let's get into Bitcoin, guys. A lot to talk about. Let's talk about the short term first. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. First one, we'll break it down for high time frames similar to yesterday's video. As we said yesterday, we had a range developing. We had deviation from range. Our range was between this green area here and this green area here. It was, of course, a weakening range. And we showed you yesterday, we talked about why it was weakening and why we saw some weakness on the high time frame and, of course, the short-term time frame. We said in yesterday's video, if we lost 29,800, this range low, okay, we were going to see a crash to fill the VRPV gap between 29,800 and 28,800. Of course, when you fill VRPV gaps, we do develop chunks of liquidity or chunks of orders, which can represent local supports. In this instance, we already had a chunk of orders, also liquidity, at around 29,200. This was, of course, our first initial target, our first pullback area. And again, we did see an area over here of cluster of consolidation prior, which broke up the volume and volatility between this move upwards. So we already knew this area, this chunk of price action had a decent amount of orders and liquidity in which we could see long liquidation wicks towards or bounces from. We have in fact seen that. So I would say this crash for now is actually over, unless we actually sweep these lows again. So for now, we are looking for potential reversals to develop as the VRPV gap we were looking to close or fill has now been filled, right? We have seen the crash down, we have seen that correction, we have seen the retracement, we have hit the consolidation range, we've hit liquidity, and we are now deciding whether or not we're bouncing or coming back down. We're going to take a look at this in a little bit more detail. So let's discuss potential directional moves for Bitcoin on this time frame, on the 2 hour, structurally, and then break it down from a technical perspective on the small time frame and discuss the next moves. So now we already know we have to change some of this stuff. So this turns into a resistance. So we have a range low resistance, okay? We have resistance here and we have the trigger. So the top levels still remain the same. This is still going to be a local resistance. This is still going to be a high time frame trigger for a continuation to 31.5 to 32.3, meaning if we do clear this local high, we will be continuing upwards to these levels. What has changed now is we've developed a new local low, which is going to be this range between 29 to 29.2, and we have flipped this resistance, well, this support as a resistance as we close that hourly candle beneath that horizontal level. So pushing back upwards, this is going to be a key trigger point for a continuation back up to 30. If we look where $30,000 is sitting, it is sitting right over here. For us to get back above 30,000, we're going to have to push through this range of resistance, which is prior support, to continue upwards. So on the higher time frame, if we look out a little bit more, if we do break below 29,000, that is when we're going to expect a continuation back towards the uptrending support, which represents the range or current uptrending diagonal trend line of the price action between the 26th of March to present, okay? Now, if we lose this uptrending trend line, which we'll discuss in a second, that is when we start to get a little bit sketchy for a higher time frame downtrend. But look at the trend line. The best way to do it is draw your trend line in. If you need visual guide, what I like to do sometimes when I'm helping out new viewers, draw an arrow. Click arrow. This is an uptrend, and therefore we are still in a uptrend, right? It is simple as that. The 2 hour chart, the higher time frame chart, the daily chart right now is still very much in a uptrend on the smaller time frame. So we do have to keep that in mind. We are not in a downtrend here until 28.8 is lost. So we'll come back to the very immediate short term and discuss the technicals and next move at the end of the video, but let's go back to higher time frame and discuss how everything is looking. So higher time frame ranges, as you would know right now, the price is sitting between the 28 and 30,000 major yearly resistance. This is a yearly resistance that represents the yearly low of support of the prior bull run. We can drag it across and we can show you. If we drag this across, we can see long liquidation wicks into this range, meaning this range is an area of strong liquidity and strong support. Furthermore, we can use our volume range to actually show you that this is a resistance, as immediately after 28,000, we have a jump in the VRPV after entering a low volatility range. This signifies that moving upwards from 25.2 to 28, we're entering a range of low liquidity, low orders, and obviously volatility rises during that period. We need less volume to push upwards, and we have more volatility. It results in faster or speeding price action. Moving into this cluster of resistance over here, as orders have increased, it results in consolidation. And as we have consolidation after an extended move, we generally find degrees of resistance, as resistance is simply an increase in historical or current trading orders, which requires more volume to push through. That is all resistance is. And that is what we have right between 28 to 30,000. So we do have that current resistance. Now, as we were talking about on the short term, guys, we are in an uptrend, right? We are in an overall uptrend, as you can see. The uptrend gets threatened when we break below 28,000 28,700. This uptrending trend line, it could be higher up, could be lower up, depending on when we retest it or if we even retest it. If we do happen to break below that level, we do have a numerous amount of support below us still. We obviously have 28,000 as horizontal support, we have 25,200, and we have 24,400. Along with that, we have a low volume range in the VRPV in which support could be found and created within this range, such as 26.5k. Now, the macro uptrend, if we're talking from a weekly perspective, okay, the daily perspective looks good. Weekly perspective, okay, on the daily chart, we are still in a uptrend unless 24,400 breaks. So 24,400 breaks, that is when we expect a move back to fill this range. And this is where the uptrend that we're in is lost if we lose 24,400, okay? Until then, every pullback, like I said, should be considered a healthy retracement regardless of however large it is. We're looking for those pullbacks to capitalize. On the short term over here, guys, on that daily chart, we can see we do have a little bit of weakness. We have bearish divergences on the daily, okay? On the daily over here, we can see two red dot prints on a downward trend as the price is rising. We can see local highs over here on the RSI, lower highs representing obviously weakness in momentum as the price is rising. This is generally an indication that the price action is slowing down. We are starting to experience some consolidation and resistance. And of course, the volume and volatility is decreasing as we can see on the volatility index, okay? We can see volatility is decreasing, and of course, if volatility decreases, momentum decreases, as volatility is one of the components of momentum. If we look at momentum, we look at speed, velocity, volatility. Those are the three things. So we want to find what momentum is. We have to find those variables, add them up to equal momentum. If we get volatility dropping, we know that velocity is dropping, because if volatility is falling, we know we're in an area of resistance. And if we're in an area of resistance, we know that we require more volume and price action occurs to slow down. So we do know that our overall volatility and velocity is dropping. Of course, speed is tied into velocity, so speed of price action is very attributed to whether or not we're entering a low resistance range or a low historical trading order range, such as these gaps in the VRPV, which we saw in the short term. We saw an increase in speed and velocity as we pushed through this range over here on the VRPV. As we had very low historical resistance, we saw the speed and velocity increase. We saw volume increase. And that is why we've seen, of course, in the last 24 hours, the volume increase on well, where's the chart over here? Oh, flipping between. Right over here, we've seen a 7.36% increase in volume. So it's all tied together, guys. You can use one indicator to backtrack to the other ones if you so require. Let's go back to the chart. So at the moment, we do have these warning signs. These are warning signs as of now. These aren't signals that the market's going to crash. These aren't saying we need to sell, we need to jump out of everything. I personally sold Bitcoin at 30,000. I'm perfectly happy with that. I've explained why. If you want to understand why I sold at 30,000, if you want to understand, did a bunch of questions. We answered like 20 different questions in here. Go here, look at all these questions, how to remain emotionless, how to increase position sizes, how to, when you're bottom in, blah, blah, blah. Is it in a bull run? Is it altcoin season? We answered a whole bunch of questions. Go check them all out. And one of the questions in there is, why did I sell at 30,000? And you'll find out the reason why in that channel. But these are not indications that the market is going to crash. Technical indicators do not predict the price direction at horizontal resistances. When we're at horizontal levels, we need to understand the short-term price action, how the short-term is developing, and we use these indicators as signals or use them as a little bit of validation or confirmation of direction. Right now, these are signaling weakness. However, it doesn't amount to anything if the trend is still up. So they'll only actually amount to anything if we start to see the short-term trend crack, and that will determine if that will occur if we break from this uptrending support line on this chart over here. That is when those indicators here are going to really start flashing these strong sell signals and a potential higher time frame correction towards 25.2k. So don't look at these like this the end of the world, but you should be looking at these like, okay, there is weakness showing. This is something I need to put in the back of my head. This is something I need to pay attention to, because it could possibly develop into something bad. And that's what it's about. Setting a plan, developing a plan, and potentially executing based on the charts when you need to, okay? Keep that in mind. Of course, if we do continue upwards as per the short-term chart over here, we break through this local resistance here, we break through the trigger point here, we can expect a push higher to around 33.5 32.3 and around 31.7. Okay, so the next horizontal resistance range as per these ranges on the charts. Very well, very good. Let's get into the short-term price action. Let's discuss, guys, the technicals. Let's really break it down onto a smaller time frame. Let's start on a very small time frame. Let's go like a 10, maybe even a 15-minute chart, and let's see what the chart is looking like. So firstly, we need to draw in our structural levels. So we have a diagonal downward sloping resistance here. Perfect, we have that one in. Let's see if we can clone this one and see if we have any channels developing. So it looks like we have common points of retest along this channel. Actually, there's our third point. So what we're doing is we're trying to identify the structure of the trend, because the structure of the trend tells us a story. Every single shape that is developing, every structure, every way the price moves creates a narrative that you need to catch onto, because these narratives determine the trend strength. We can use these narratives to determine the overall strength and the direction of trend. These shapes aren't to say, oh, we're in a descending channel and therefore descending channels break up. No, these shapes are visual representations of what the price action is doing in relation to the strength of the trend. You have to start looking at these structures a little bit differently. Don't be like, oh, I need to find the triangle and trade the triangle. No, what does a triangle tell you? What does a triangle like this tell you? If the price enters on the downside and consolidates, what is the narrative that is telling you? It's telling you that we've entered from a period of increased volatility and we're consolidating sideways with decreasing volume, volatility, and liquidity while in an overall downtrend, because we entered from the top side in. Therefore, if we do lose the current range low support, the volatility that we experience is likely to increase again, and we're going to continue toward the downside as we have broken that momentum trigger point. So all of these shapes tell you stories. You have to identify the narrative. And that is why I always say, understand what you're trading. Don't just trade, understand what you're doing. Right now, descending channel formation. We know that this is an overall downtrend. What we can see here is a downtrend has broken. So we know the downtrend is broken, and for the downtrend to break, we would have to have seen a momentum shift. Now, if momentum hasn't shifted, which we'll check in a second, and the downtrend broke, this is a red flag. This is something we are quite concerned of. So let's take a look at the momentum. We take these local tops, these same pivot points, we drag them across to resistance points. So you can see how they match up right over here. Now, the RSI isn't a reflection of price action. Remember, it is a reflection of speed, velocity, and volatility, not a reflection of price action. So when we see these breakouts occur at the same time, it tells us the probability that this breakout is validated and will continue upwards is greater than the probability that is going to fake out and push back down. So we do have an overall bias right now toward the upside. We have structural confirmation. We have our momentum confirmation. Now let's look at some technical confirmation. Market cipher A, let's bring it up. We can see something not very nice over here. We can see the price is rejecting from the 50 EMA, and we can see the price is in a small chunk of resistance. So we do know we have a trigger point right above us. A trigger point meaning a price point we need to break above to see the price continue upwards. So to find that, we need to go down to a smaller time frame. A 5-minute chart will suffice for this. Let's go ahead and input some of our local highs in, some range highs. We can see 26,600. The moment we break above that, our historical volatility or our volatility in general should massively surge. If we're in an uptrend moving into that trigger, we know we have momentum. Okay, we know we have volume, and then we'll have volatility that will result in a strong push into this range. So if you want to look for a safe entry, guys, we're looking for a break over 29,600. That will validate a move into this next resistance. Currently, we do see a cluster of resistance over here. I would like to see a break or push above some of these local highs over here. And again, this grind up should take a little bit of time. I don't expect it to happen very quickly. We could even come back down a little bit before we see that. But as long as we remain above 21,900, or this downtrending support, more importantly, this trend looks like it is reversing, I will expect the next move to push upwards into this green range, this new resistance that we've developed. The question then remains, are we going to push upwards through the resistance, or could we reject and come back down? Both scenarios are entirely probable, and we'll have to discuss when they occur. Let's quickly talk, for the sake of it, if we do push through this resistance, the resistance will now become a support. If we push through resistance, we are very likely, incredibly likely, to match the deviation we saw here to the downside. It's very common for horizontal ranges to kind of mirror top and down moves. We do generally mirror these deviations. So if we do push upwards into this range, I would expect a continuation back into this local resistance, in which we'll retest for a potential push upwards. So the trend right now is looking pretty damn good, okay? Keep your eyes on the short term because a potential reversal is incoming. If you want to validate that, check those trigger points. If you want to look at the overall trend right now, all you need to do to flip your bias is flip it. What are we seeing right here? We're seeing a huge potential round of bottom formation, okay? We have a local resistance here. We do not expect the next move to push upwards until that trigger point is broken. As we discussed, 29,100, perfect. And we do see we are starting to drop on some momentum over here. Of course, we have a bearish divergence developing, okay? We can expect potential range gap into this VRP range, which takes us to retest that low. What is that low? 29,100. So we can backwards validate our biases, we can backward validate our potential directions by inverting a chart, and then that enables you to check your biases. If you have a chart the standard way around and you expect the price to go up, but then you flip it, and then all of a sudden you expect the price to go up, that is a contradiction in your analysis. If you have contradictions in your analysis, it's generally because you're analyzing your charts from an emotional perspective or a self-serving bias perspective rather than a technical and data-driven perspective. Thanks for watching, guys. I hope you enjoyed. If you want more information on how to trade, if you're a new trader, if you want to learn TA, basic TA, we teach you everything in Crypto Academy course. Perfect if you're new to the space. 10-unit course, teach you absolutely everything you need to know. Contact us via the email down below for more information. We'll send you all the information for the course. Thanks for watching. I'll catch you guys in the next video.